If I may, President of Suriname, colleague heads of government, Congresswoman Waters, and members of the Financial Services Committee of the United States Congress, it feels good to say that, and distinguished guests all, let me first of all welcome you to Barbados, all of you, and to say how pleased we are to have you at this historic meeting between CARICOM heads of state and heads of government and the Financial Services Committee, a subcommittee of the Financial Services Committee of the United States Congress, in this congressional delegation that is visiting us over these few days. We are very, very happy for the engagement because we believe that we live in the same neighborhood, we are friends, we are family, and we have a vested interest in making this the best neighborhood possible for all of our citizens. And we recognize your commitment, and there is nothing, we have a saying in the region, actions speak louder than words. And if I could sing, I would sing the phrase in the song that made that very popular, but since I cannot sing, I shall continue to talk. Let me say at the outset, we are unflinching in our support for international efforts to stop crime, to stop terrorism, and to stop their financing. And I say so without fear of contradiction. Ironically, this building, if it could speak, would tell many stories. And the first of them was a historic meeting between CARICOM Attorneys General and the IMF and the other international financial institutions back in 2001, just after 9/11, when the world was coming to grips with Resolution 1373 and all of the other resolutions that would be put in place to counter the impact of 9/11 and to counter the terrorism financing and money laundering that was believed to have fueled that event. At that meeting then, we made a very simple point. I can speak to it without relying on hearsay because I was Attorney General of Barbados at the time. At that meeting, we made the simple point that there cannot be a one-size-fits-all prescription, because to do so would be to put on small states prohibitive burdens, and that the appropriate measure should be that regulation should be appropriate to risk. That whatever the nature of the risk, we need to assess it, and we need to ensure that our regulation meets that risk. It is against this backdrop, therefore, that I restate our position. We are unflinching in our support for efforts internationally to stop terrorism, to stop crime, to stop the financing of both of them. And that has made us unpopular among those who believe that money laundering and know your customer rules are backward and repressive. It has. But the current regime, we believe, of anti-money laundering and countering financing of terrorism is so transparently flawed that it is likely to end up being counterproductive, inadvertently supporting crime and the sponsorship of financing for crime. The countries routinely on the anti-money laundering list have relatively little finance of any sort, very little international finance of any sort. The countries that have never been listed and will never be listed are where most international financing regrettably takes place. The rich countries develop and drive the list. Those countries do not appear on the list. And criminals can see and follow who do not appear on the list. And it doesn't take a Solomon to know which and where is the path of easiest resistance. The truth is, from the busting of money laundering, we know that transactions are routed through Sydney, through London, through Dublin, through Toronto, through other countries in Europe, through New York, and through some of the states, regrettably, in your country as well. We do not hear any of these centers being sanctioned, nor do they face the spectacle of enhanced due diligence. The sanctioned countries, Haiti, Nauru, South Sudan, Senegal, Uganda, Jamaica, Barbados, Bahamas, I can go on. You may spot some divides on this list, but at the very least, the divide you should spot is that none of us have the capacity to have an impact on international finance. I ask us to recall this because I feel that too often we are making the point that we do not have the capacity to distort global systems, but yes, yet we are asked to carry out the same level of regulation as large countries that have that capacity to distort global systems. And that is why we say that regulation must be appropriate to risk. At the end of the day, when we do these things, there's a flawed and discriminatory outcome that is a result of a process that is not based around actually finding money laundering or identifying critical elements that money launderers require, like loose beneficial ownership rules in the United Kingdom and some of the United States, where you don't have to disclose who is the beneficiary, but yet we are having to restructure our laws and processes to ensure that all beneficial ownership is disclosed to everyone. Big countries can spend money to tick boxes. Indeed, I said to Prime Minister Braceno that one of the clear deficiencies between large and small countries is that we have limited resources to support us, even in conferences such as this, far less diplomatic negotiations. So that when we come to weighty processes that allow us to tick boxes, big countries will always, always do better than us when it comes to this. Barbados, as I said, has appeared on these lists, even though we have exchange controls in place for the movement of capital outside of our country and for the movement of capital into our country. Can you imagine a money launderer wanting to take on exchange control questions to move money in or out of this jurisdiction? It would be a nightmare for them. And that is one of the reasons we make the point that the substantive engagement of what we are trying to do ought to focus on the crime itself and not on the notion of what could possibly be a deterrent to prevent the crime. A team of Australian academics recently conducted a field experiment, dressing themselves up in the red flags of money launderers, and timed out how long it would take for them to set up an operation in over 172 jurisdictions. It took a day or two in the United Kingdom, in the United States, in Canada, in Ireland, and in Australia, faster than in any Caribbean country. In some Caribbean nations like the Bahamas, they never broke through, never. Yet, the developed countries at the top of the academics' list of most easy places to launder money have never been listed. Money launderers like it so. They find it easier to clean and hide their money in large, busy jurisdictions. So it is good for them that there is less targeting there. There is nothing like getting lost in the crowd. When a country appears on these lists, or looks like countries that do, it is a risk to their correspondent banking. And that is why we are here today. They fear not so much money laundering, it seems, but the increased cost of flagging transactions in listed jurisdictions. I'm referring, of course, to the banks. The logic for the banks is that the penalties and cost of enhanced due diligence would be too large for them with respect to the relative profitability in that small jurisdiction. And hence, we hear all the time, you are just too small for us to take on that enhanced due diligence. I pause here and ask us, what is the purpose of banking? What is banking supposed to serve? Who is banking supposed to serve? Is banking not supposed to serve citizens to be able to do their business, to trade, to save, to invest, to borrow, to expand? If we reduce the footprint of those who are capable of engaged in banking, then we reduce the prospect of economic growth. If we reduce the footprint of banking, then we create financial lepers and financial pariahs, because it means that those who cannot access banking will not be able to have a legitimate expectation to do business, to own a house, to trade, and to do all of the things that we were taught 30, 40 years ago were to be the natural right of a citizen, to be able to engage in a community. Of course, cross-territorial movement of money presents problems. And that is why I make the point that for those of us who have exchange controls, it's almost a farce because of the complexity of the questions, and I look at the governor of the central bank as I speak, because of the complexity of the questions and monitoring that is put in place in a country with exchange controls. So that we ask ourselves, what is it that has really happened? Correspondent banking, I'm told, has dropped by 25% in the last decade. 25%. That should be a red flag to all of us. Because if in our neighborhood those relationships are being lost, people are still living, people are still trading, and people are still doing business. The question is how? Is it at an efficient level? Is it on a parallel track, in a parallel economy? Does it suit all of us in this hemisphere to have two systems, to have a dualism that regrettably reflects the disparities in world power? Or is it in our interest to be able to look at and see it for what it is, that there is a large element of anti-competitive practices being reared? If I speak to colleagues on this side, and you may say that what was good 2-3 decades ago may not be good today, but every single country at this table was encouraged to go into financial services by North Atlantic countries. Every single country at this table. And we went into financial services in the absence of a development compact, or what some may call reparations, at the point of independence. Why? Because we had to find a way of supporting our citizens. And we were told, go to tourism and go to financial services. And that is exactly what we did and tried to do, and I would dare say did it well. Part of the difficulty, as with the WTO, and our inability to distort global trade in services or goods, is that we just do not have that scale. And therefore, when the Financial Action Task Force or the OECD presents lists, we accept that their list does not include punitive measures. We accept that. But when the European Union takes the result of their list and then publishes their own black lists and gray lists, although the colors have gone since George Floyd, and we thank you for that, the result is that those countries on the black list are then the subject of enhanced due diligence. Now, I want to tell you a story with the FATF, who generally we have no problems with. But they did something on the last occasion when we all got listed. And when I say we, I mean Ghana, I mean Botswana, I mean Barbados, I mean Jamaica. The AG is behind me. He's going to meet with them up to next week again. They changed the definition of money supply from M2 to M3. Now, I am not a financier nor an economist. And M2 and M3 sound like a car number in Barbados. But in truth and in fact, it is the definition of money supply. In so doing, what they did in simple terms was to move us into another weight category for those who like boxing. And in putting us in that other weight category, we had not prepared to be in there and therefore we were found wanting in almost a number of key respects that then led us going on to a list. All of us would agree that if you're going to do an assessment on anyone or put them in any kind of competition, then they ought to know what the rules of the game are before going in. So that we are now fighting a rearguard action to come off of a list as a result of a change in definition of money supply that we were not aware of before the assessments were done. I refer to this because that is what caused the European Union to put all of us equally on a list. Now, when the European Union puts us on that list, then the banks there say, we are not doing business with your country because you are simply too small. We don't make enough money from your country in order for us to invest in this enhanced due diligence measures. And therefore, we speak not from hearsay again, but from experience of banks withdrawing their services from doing business with us in this region, largely because of a process that started in breach of natural justice. That is wrong, and it is unfair. We believe that given that the IMF estimates that it could cost as much as 6% of GDP, a large chunk, if we don't get these issues right, that we will have to confront it. And that is why we are so grateful for the opportunity to have this meeting today with you, because as you said in 2019 when it started, this requires greater investigation. It may well be too, Madam Chair, that you may well even feel that it is necessary to have hearings, congressional hearings on these matters. And I can assure you that if you do go in that direction, that all of us here would be prepared to participate, as well as other representatives in the region, because this strikes at the very heart of our ability to keep our countries and our economies safe. The solution to this conundrum for small developing countries is that the international process of fighting money laundering be more focused on money laundering itself. An example of this would be for us to demand that no country can be placed on anti-money laundering sanctions lists unless there is also actual evidence of the material money laundering. To simply sanction a country on the basis of a list where you want them to do better is to have a disproportionate consequence on us without evidence of there actually being money laundering. So that we take punitive decisions on the basis of risk against small countries, but not on the basis of actual money laundering. We are suggesting to you today that it should be on the basis of material money laundering having been committed, rather than simply the risk or potential of money laundering done in an academic exercise. It would incentivize more focused, more accurate, and more relevant efforts, and make it harder for money launderers in any event to get through the system. The current system, my friends, makes it too easy for them. And if we doubted how easy it was for them, we only need to follow the trail of the confiscations taking place globally as a result of the war in Ukraine, and where the properties are being confiscated, where the yachts are being confiscated, and what happens. And that tells the story of today's meeting more than anything that any of us on this side can say. We look forward to meaningful engagement with you. We thank you also for bringing representatives of the banks from North America here, and those who are responsible for money transfers. We are appreciative of your taking the effort to come to Barbados. We hope for those of you who have never been to the Caribbean or never been to Barbados before, that this will be the beginning of a love affair that will make all others seem small. But without prejudice to those romantic notions, we say thank you for coming, welcome, and let us, at the end of today, conclude that we have spent a day that can advance the causes of both of our region's populations, us in the Caribbean community, you in the United States of America, and that we can bring a real difference in a way that our citizens expect us to do on matters of public affairs. Thank you, and may I invite you now, Congresswoman Waters, to address us. Thank you.
Thank you so very much, Prime Minister Mottley. Good morning, everyone, and thank you for having me here today. I am so pleased to be able to join with Prime Minister Mottley in hosting this roundtable that touches on very important issues in the Caribbean, including de-risking. Joining me today from the United States Congress are members who serve on the Financial Services Committee and at least one other who does not serve on the Financial Services Committee but is so very interested in the Caribbean and dealing with this de-risking issue. I am so thankful and pleased and honored to have present here today the heads of state of at least 8 of your Caribbean neighbors. I'm also pleased that there's so much representation here, and I'm so pleased that you have deemed this to be such an important meeting that the representation that we're witnessing here today was made possible. Thank you, thank you, thank you. I am indeed committed to fostering great inclusion within the financial services sector, and as chairwoman of the Financial Services Committee of the United States House of Representatives, my committee has prioritized promoting financial access to traditionally marginalized and underbanked communities in the United States and abroad. For the Caribbean especially, this has long been a personal mission. Simply put, the Caribbean, its people, and its culture matter. The islands of the Caribbean are among America's closest neighbors. We do tourism together, we do trade together, we secure the hemisphere together, and we're family, both as a regional community and also through the Caribbean diaspora in the United States. Because of this close and cherished relationship, as Americans and members of Congress, we must work not only to ensure that the region is able to participate in these activities, but that it can thrive as well. Central and critical to that capability, at the core of being a good partner and integral to opportunity for the Caribbean, is financial access for individuals, businesses, governments, and the region as a whole. For many years, I've been engaged with financial institutions, U.S. agencies, the multilateral development institutions, and leaders from the affected nations to seek progress on reversing the harmful de-risking trends that we have witnessed take place over the past 15+ years. There have been improvements, especially as many of the Caribbean nations have enacted significant financial crimes compliance measures. Yet, despite these good faith efforts to reform, many Caribbean nations continue to face considerable challenges in accessing financial services. Instead of accepting financial exclusion as fate, we must work together to find ways to increase financial connections, including correspondent banking services to and from the Caribbean. So I continue to focus on what we can do in Washington to support the Caribbean, including bringing together key stakeholders. In November 2019, I hosted a de-risking roundtable that included leaders from across the Caribbean, representatives from banks and financial institutions, and members of Congress to discuss solutions and foster greater financial inclusion. Since then, my staff has continued to work with many of you in the room today to keep moving forward on finding solutions to this issue of financial access. So I'm very pleased to report that I've made progress in raising the issues profiled in Washington and highlighting its urgency. Most notably, I led the passage of legislation that is moving the U.S. government toward tangible solutions. In the Anti-Money Laundering Act of 2020, we mandated a U.S. government-wide strategy to combat financial de-risking. Due later this year, this United States Department of the Treasury-led strategy will require our United States agencies to detail the steps that they will take to address this concern, and it will describe how Congress can support that effort. But this complex issue of de-risking cannot be solved by the U.S. Congress alone. That is why I'm pleased to have regional leaders, representatives from major financial institutions, and of course, my congressional colleagues, all gathered here today. Bold, cooperative action from all stakeholders present is required for us to reverse the damage caused by decades of de-risking and deteriorating financial access. Further, as a framework is advanced, that we cultivate in the Caribbean could become the model for other regions around the world facing similar obstacles to financial access. So I welcome a robust discussion on the causes of de-risking, as well as the negative effects to financial access to the people and the region. These are the reasons that we cannot choose talk over action. Thank you for hosting me here today, and I'm so looking forward to engaging with you to solve the issue of de-risking in the Caribbean. And I cannot close my remarks by not saying to you how thankful we are for the way that we've been welcomed here, how thankful we are for your generosity, how thankful we are that you have decided that you can trust us on this issue, and that we're continuing, as we promised we would do, to follow up on that roundtable that we started in Washington, D.C. And I want you to know I respect the Prime Minister so very much. Her reputation precedes her as a great leader. And today she said to me, wouldn't it be wonderful to have a congressional hearing on this issue? And so she had but say it, it's done. Thank you so very much again for having us.
Thank you very much, Co-Chairs, Prime Minister Mottley and Chairman Waters. Today, for us in the Caribbean, particularly for me, is a very special day, because what we're having here today is really a family meeting, family gathering. One only has to look at the map of the Western Hemisphere and to notice the closeness geographically, the Bahamas to Suriname, of the peoples of this region. And what has brought us here today is the effort of those of us in these islands to demand our space and the acknowledgement of our existence in the Americas. We are neighbors to the richest and most powerful economy of the world, and we are in fact making not a request, but a demand that we be allowed to participate and to benefit from that accident of geography and history. Chairman Waters, you may recall that I had the pleasure and honor of visiting you in your office in Washington in 2019, just before COVID, as part of the CARICOM delegation traipsing through Washington, trying to sound the alarm that something is not right with us and the politicians and decision makers of the United States need to be aware. It is because we believe that if you become aware of the facts of the situation, we have every confidence that you will do right by your brothers and sisters in the Caribbean. And that is why today I join my colleagues from CARICOM in welcoming you, all of you representatives, to the Caribbean here in Barbados to discuss this matter, and hopefully at the end of our discussion to take, as you have just done, the decisions that will benefit all of us. When we met in Washington in 2019, September, the offer of a hearing was on the table, and I have confidence that it would have materialized, because the way you've dealt with us in the COVID pandemic, acting as an unnamed, unlettered advocate for Caribbean peoples to access vaccines when vaccines weren't available, we truly regard you as an honorary member of Parliament of the Caribbean, because you've worked so hard and so diligently on our behalf with those vaccines that you are here again working like a representative for the Caribbean on this financial services matter, and we know that we are in good hands. And we want to particularly welcome home our colleague and your representative from the Virgin Islands, Representative Plaskett, who is on this team. And for those of you who are meeting us for the first time, I trust that we can be confident that you too are here because you care about us. And the issues that we are raising today is one, not only of fairness, but one of survival. Decisions taken away from us outside of our region saw us losing the production of bananas for a livelihood, sugar for a livelihood. And we are encouraged every day to diversify our economy. One of the areas of successful diversification that we have been pursuing is in financial services. Today I have with me here the head of one of Trinidad and Tobago's banks, our main bank, Republic Bank, is here today. There's another bank, FCB, which has shown that indigenous banking could grow and provide to the people of our region an area of economic activity which should be safe and productive for us. And we have been doing that. A Trinidad and Tobago bank is now very present. Last night I was driving through Bridgetown, and I saw a number of buildings with the logo of the Trinidad Bank in Bridgetown. And they got their footprint as far as Ghana. Only this morning I got good news that business that we have been trying to give birth to in Ghana has come our way with one of the first major contracts. And our Trinidad Bank in Ghana is representative of how financial services could bring about growth and good processes for us. But everything that Prime Minister Mottley has said, I endorse, because it represents all our interests and our understanding of the situation. Arbitrary, self-serving action from the developed world, seeking to say, if, as we interpret it, that you may enter, but don't go too far. That's what they're saying to us in the banking business. And banking is something that we can do, something that we must be allowed to do, and it represents successful diversification of the economies in the Caribbean. And Prime Minister Mottley put it very clearly that the stereotyping that goes on in the management of the issue of safe banking, that you can be assumed to misbehave by how you look or where you live, and therefore you put on a list convicted of misbehavior. This gathering, this family gathering, should have a family position that will remain innocent until proven guilty. and therefore should not be listed for any wrongdoing that we have not participated in. For example, Trinidad and Tobago is not actively engaged. As a matter of fact, I can probably say not engaged at all in offshore banking. Our economy, we focus elsewhere, hydrocarbons and other things. But I have seen on many occasions documentation assuming that because there's concern about offshore banking in one Caribbean island, well, you all are just guilty and dangerous. And what the banks are concerned about is that there are risks that could come from doing business with us. That is a position that we find unacceptable, because we believe that there's great progress to be made from doing business with us. And the facts will support that, not the fiction, not the discrimination, not the disrespect. It is possible that Caribbean banks can become, and we must become, an integral part of the American banking system, and by extension, the world global banking system. The opposite is what is likely to happen if this meeting and these contacts do not bring about a change in course. We spend a lot of money on our young people. We've generated in Trinidad and Tobago and elsewhere in the Caribbean people who can operate at the highest capacity in manufacturing, in petrochemicals. We've done the same with digital technology and financial services, where digital technology allows us to be able to manage better the entry and monitoring of people in banking. But what do we face? I can tell you one example where a young person who is trying to open a bank account in a Caribbean country, up-and-coming attorney in a reputable law firm, is having difficulty opening a bank account. That could not be right. That's not what the regulation is meant to do. The regulations should really encourage us to take part in banking. And to use your term, which is well known in the American banking system, is the unbanked. The presence and maintenance of a population of unbanked people. That is where the problem is. And that is what we should try to eliminate. But we are increasing it by the kinds of restrictions that are sometimes close to nonsensical. And also, we have the situation where if we are being listed for crimes we didn't commit, where it is known that the effects are happening, there are no consequences. I will give you one example. A few years ago, a Prime Minister of Trinidad and Tobago declared, as the country has done, that we will prosecute white-collar crime, because white-collar crime and corruption are scourges to our country. And the Trinidad and Tobago Prime Minister went on a visit to Washington and met there, as part of his visit, the President of the United States. And he outlined to the President this objective of my country to fight white-collar crime. And it was President Bush the Elder. And we said to him that the United States is not helping. As a matter of fact, is engaging in facilitation of protecting white-collar crime that is hurting us. And President Bush said, I will see what I can do. 3 months later, Trinidad and Tobago received a box of documents that existed in Florida, which resulted in the criminal prosecution of a number of people who had stolen hundreds of millions of dollars from Trinidad and Tobago. And this is common practice. That is just a small example. And as Prime Minister Mottley said, we are now in great consternation observing the epiphany in London and elsewhere that these people are kleptocrats, and they've been hiding their monies in Mayfair in London, and that would stop from tomorrow. And it leads us to ask, had the Ukrainians not been bearing the brunt of this attack, what would have happened to the money laundering and the encouragement and the disproportionate action that has been taken in situations where we are striving to have economies survive? Because let me say to our colleagues here from North America, if we can't grow bananas, we can't produce sugar, we can't sell clothing, we can't sell fish, and we can't bank, what kind of economy do you think will exist in the islands of the Caribbean? And if there are no sustainable economies, what is to become of these millions of people on these islands? And isn't that a security threat to the United States itself? So there's a mutual interest here. It is in your interest to ensure that we can survive, that we can do things to live. And one of the things that we are doing and can do better in and must grow in is the banking sector. So therefore, this meeting between us and the financial services community of the United States Congress is for us a survival issue. And we know that you're going into elections in the United States very soon, and in a few months' time you would not, even if you wish to, have time to talk to and about us. So we're hoping that these hearings can take place as quickly as possible while the window exists. Thank you very much.
Thank you, Prime Minister Rowley, for a very, very strong statement. And as I invite the CEO of MoneyGram to speak, may I only say that it's perhaps best captured in the disparity in time it takes to open a bank account in the Caribbean and the time it takes to open a bank account in the USA and Canada and the UK. You're talking about minutes or hours as compared to weeks and months. And we're not talking only about teenagers at 18 and 20 who are asked to produce electricity bills or phone bills as if they live in their own houses, but we're also talking about large companies who, because of the complexity of the questionnaires, and those of you who bank in the region know what I'm speaking about, sometimes it takes weeks for a credible company from outside to open a bank account to do business in our region. They then look for other countries to go and work with. Mr. Holmes, we are honored to have you here, and thank you for coming. And we know that in this world it is not easy for travel to take place generally, and that you have come is an expression to us of how serious you treat this issue. Please.
Thank you very much. Prime Minister Mottley, thank you for your kind words, and obviously thank you for having us in your beautiful country. It's a wonderful setting, and thank you for that. Chairman Waters, thank you very much for the opportunity to be here with you as well and to have the opportunity to speak on behalf of the financial services industry and the remittance industry in particular, as that's obviously very close to my heart and to what we do. The opportunity to spend some time with you all to discuss these important matters is not something that's taken lightly. We operate in over 200 countries around the world. We move money in and out of those countries as expeditiously as possible. And it takes an incredible amount of work on the part of our organization and governments around the world and banks in every country and every region. And it is not getting easier. It's getting more difficult despite the changes that have been pushed to improve compliance across the regions. And so obviously, this is a critical issue for us all. Our customers at MoneyGram from the Caribbean diaspora depend on our services to send money home for school fees, for medical costs, housing for family members, and so much more of life's essential needs. As you know, there's a high degree of dependency on remittance flows from many countries in the world, and particularly in this region. Jamaica, 15% of GDP, Haiti, 35% of GDP relies on remittances coming into those markets. Hence, a decline in these countries' ability to obtain inflows and outflows, for that matter, undermines their economies and their potential to continue to move forward. Frighteningly, despite the importance of remittance flows into and out of the region, MoneyGram, our agents, our local banks, our partners at Western Union, all continue to be impacted by de-risking and have been dealing with this issue for more than a decade. The challenge is well understood by the people around this table. It's well understood by the representatives from Congress. It's well understood by members of the U.S. Financial Task Force and other governmental regions, and yet the issue continues to persist. I commend the CARICOM heads of government, the U.S. Department of Treasury, the OCC, and the Financial Stability Board, who have all made it clear that they understand the seriousness of this matter and have given it their highest priority. It should also be said that while this issue is not new, the complexities we were all addressing in 2010 and even before, when many of these challenges first arose, are completely different from the situation today. At that time, there was a perception problem for both money service businesses and the Caribbean region and banks in the region. The nexus was simply viewed as a haven for money launderers and financial fraudsters, as many of you have pointed out. In over a decade, what has changed is both how the regional banks and MSBs implement compliance controls. AML, CFT rules, and regulations have been widely implemented. Regional institutions are spending more time and resources on compliance training. Governments have been active in the development of the Caribbean Financial Action Task Force. Tax reporting standards have improved. Regional governments have implemented robust legislation to support enhanced due diligence, and active participation in cross-border investigations continues to take place on a consistent basis. What has not changed, however, is the historical perception of risk in the region and the risk of banks providing correspondent services to money transfer companies, our agents, and our bank partners in the region, all of which, of course, clouds the ability for the Caribbean to move forward. Another challenge is that U.S., Canadian, and foreign correspondent banks see increased expense in dealing with small-scale markets and thus lower profitability in doing business in certain regions. Perceived risk, along with increased costs of operating in low-volume or small-value markets, has driven decisions to simply exit those markets. I would certainly agree that compliance costs have increased over the past few years for U.S. correspondent banks and for money service businesses, or anybody for that matter, particularly in light of all the new AML CFT rules, international sanctions, and new regulatory enforcement. However, these increases in costs have actually had very positive effects on the banks and the MSBs themselves, like MoneyGram, who have completely transformed their compliance programs and are now meeting the highest standards of compliance standards in the banking industry. Nations have worked diligently and tirelessly to implement improvements with respect to compliance with all new and improving international regulatory standards. Despite these changes, the Financial Stability Board and the Financial Action Task Force have reported for several years now that banking industry continues to perceive that financial activity within the Caribbean is, by definition, high risk. Rather than manage that risk or assess banking partners on an individual basis, a blanket assessment is being made and banking relationships continue to be terminated. That assessment is a sentence of permanence. Once you're on the gray list, there's hardly any chance of moving off of it. Avoidance of perceived high-risk activities, such as important services like remittances, then becomes one avenue implemented by local banks and governments to attempt to avoid these assessments. Almost every bank in this region today will accept inflows from MoneyGram, but will not provide us banking services in region to accept deposits from our banks or our agent partners or for MoneyGram itself. What seems to be missing is a broader sense of urgency across the board to address these issues and move it forward. More than a decade has gone by, and there continues to be a dire lack of access to basic financial service products and services across the region that are a prerequisite for participating in an ever-developing and modernizing economic life. Despite the complete overhaul of compliance programs, the logistical hoops of operating in the region are increasingly more difficult. Amazingly to me, somehow it is more difficult to get a bank account in this region than it is to hire armored car services and airplanes to load cash onto and into, to fly to other countries to land those deposits and move them into banks. I look forward to using our time today to target solutions that can improve a problem we have long been familiar with. And that's what I really hope for today, is a very targeted focus on finding solutions. For too long, modest discussions and acknowledgement of the issues continue to raise and make light of the issues, yet solutions have not been implemented to improve the situation, and bank de-risking continues to have an impact on the very vulnerable citizens of the Caribbean region. Increased poverty, vulnerability to driving transactions underground, shadow banking, and illicit finance are already known effects of bank de-risking. Thank you very much for the opportunity to be here today. I look forward to speaking with you all as we move forward. And I'd like to now turn the floor over to Mr. Nigel Baptiste, President and CEO of Republic Financial Holdings.
Thank you.
Thank you, and good morning to everyone. It is my pleasure to deliver these remarks on behalf of the Caribbean financial institutions community. And I would like to open my remarks by quoting from Chairwoman Waters in a 2022 Caribbean de-risking report. The ability to build businesses that support trade and tourism, to employ citizens, to facilitate economic development, and to allow families to send and receive funds from abroad is dependent on the ability to use banking services. Citizens rely on this vital connection to engage in their daily lives, highlighting the fundamental importance of financial inclusion to the Caribbean. Access concerns stretch to every island and every person in the region. Individuals, businesses, governments, and communities. They have all lost the ability to send money overseas or to pay for needed goods and services. These things require banking tools that many take for granted. The financial services that sustain their livelihoods and allow the Caribbean to thrive. And if I could just edit the last word, Chairwoman, allow the Caribbean to survive. The Republic Financial Holdings Group, our footprint, spans almost every Caribbean country, from Suriname in the south to the Cayman Islands in the north, while we are headquartered in Trinidad and Tobago. While our size has largely shielded us from the direct negative consequences of de-risking by correspondent banks, we are not immune to its impact. Throughout the Caribbean, our clients and my colleagues in the various countries lament the adverse effect of the loss or lack of financial access on the conduct of regular daily transactions. Even where financial institutions such as ourselves have not lost access to our correspondent banks, we have had to self-regulate, and in so doing, restrict access to our network by many individuals, most of whom tend to fall into the marginalized communities in our society. This is unfortunate, but necessary, because financial institutions in the Caribbean are presented with Hobson's choice. We either de-risk our clients or be de-risked ourselves. When we first heard of this initiative, we were very eager to participate. Two of my colleagues were among the initial task force members, and I'm pleased to be present at this morning's roundtable along with my colleague Suzanne, because we view it as the next step in making the objective of financial inclusivity a reality. Our view is that we are all stronger together. The collective is more powerful if we each individually are strengthened. I'm looking forward to a highly productive discussion, but more importantly, I'm looking forward to concrete actions being agreed upon to achieve our mutual objective. The Republic Group is committed to such a reality, and we look forward to playing our part to make it happen. In closing, I would like to thank Chairwoman Waters for her commitment to this ideal and her passion, and Prime Minister Mottley for co-hosting this roundtable. I mentioned to her when we spoke a few weeks ago that I was committed to this cause, so I'm really pleased to have received this invitation to be here today. I am encouraged that so many leaders have taken the time to attend, and I am filled with confidence that the time invested this morning will be our down payment for a more financially inclusive Caribbean society in the not-too-distant future. Thank you.
Thank you very much, Nigel, Mr. Baptiste, and thank you also, Mr. Holmes. I think both of you have wonderfully placed this issue in context from the private sector's perspective, from those who have to deal with cross-border transactions, and I think that the message is loud and clear to each and every one of us. And in particular, I heard you make the point that you either have to de-risk your clients or de-risk yourself, and that may account for the belt, suspenders, and hoist approach of banks in the region that make it impossible for ordinary citizens to get easy access to banking. We have one final speech, and I'm going to ask the Chair of the CARICOM Commission on Economy, Professor Prasad, to just close off this opening session for us. Thank you.
Thank you, Prime Minister. We've heard some powerful and excellent presentations this morning. I think they've really framed the issue extremely well, and it's a bit of a tough job to try and summarize some of these issues. But what I would say, if I were to begin with Chairman Waters's, the distinguished Chairman Waters's important framing of this as an issue of financial inclusiveness, it is useful for many to remember that the Caribbean historically has had one of the most inclusive financial systems for developing countries. We have a long history of credit unions and savings institutions established around the trade union movement, around employers, around local regions. And this, for the first time in our history, the numbers of unbanked are increasing. And they're increasing as a result of the perception of riskiness that is caused by the arbitrary listing of Caribbean countries. If I were to give an example of some of the arbitrariness, because it's really about, as the Prime Minister said, it's about focusing on process rather than outcome. And when you focus on process rather than outcome, you discriminate against the small. You discriminate against the people with least resources, especially when they happen to be the ones that actually are not really where the source of the problem is. If any of us were given the job of tracing Russian money after the tragic events of earlier this year, would we have started in the list of countries that are currently, in the countries that are currently listed? Would we have done that? Would we have started with Burkina Faso? Would we have started with Haiti, with Bridgetown, with Barbados? No, we would not. We would have started and focused on a range of countries that are not listed. And let me explain some of the process of that, because we recently have had a review when Barbados was listed. And at the time, I was chairman of the Financial Services Commission. And the Financial Services Commission had a black mark against it with regards to what it was doing on insurance companies. It wasn't that we didn't have the right legislation in place. We did. It wasn't that we hadn't identified which were the risky insurance companies. We did. It wasn't that we didn't go into those 50 risky insurance companies to do an investigation. We did. It was that we didn't write a letter to say that we were going through an investigation and the investigation was now complete. And for that reason, we got listed. For that mock sport reason, Bridgetown is listed, but London is not. And when we asked our bewildered officials, why did you not write that letter? They said, because the investigation isn't over. We think it's an ongoing investigation. We want to keep on going back to the risky insurance companies. So why would we write a letter to say it's over? And we told them, well, that's what the FATF want. So countries are being listed in an arbitrary way. And they are listed when they have very limited actual international financial impact, or where the money laundering is. And as the Prime Minister said, the money launderers like it so. This process is increasing money laundering. It's telling the money launderers where to go. It's telling them don't go in these small states. And the problem is that our financial inclusiveness is now going backwards for the first time. So how are we going to change that? Because us spending more money on more processes, so we currently spend more as a percent of GDP on AML processes than any of the countries which are the centers of money laundering. We're spending more money as a percent of GDP and getting listed. We're spending more money than those countries that should be listed. So should we spend even more money when we have very limited budgets, very limited balance sheets? We're spending, the senior people of the government is spending its time dealing with a phantom problem when they could be dealing with a real problem of poverty and inequality and climate change. No, we've got to spend our time wondering, why did our officials not write a letter to say that the investigation was over, when quite reasonably they thought the investigation should be ongoing? That's what we have to spend our time doing. So how do we really solve this problem? What is the way, the low-hanging fruit here? Is it to spend more money on de-risking? Or is it that we try and persuade, with the help of our American friends and others, that this process of sanction and listing must have two aspects to it? It should be about process and do you have the right rules in place, or that they should be focused on money laundering. What matters is not whether we wrote a letter or not. What matters is beneficial ownership, information. And actually, that is something that you find many of the Caribbean countries have become some of the best in the world at. So we need those processes to be focused on money laundering, but we also need a process to be allied with a reality of, let's look at the top 10 investigations on AML. Let's see where that money was. Let's look at the investigation of trying to hunt for money. Where did we find it? Not where convictions are, because many of the small states that do not have money laundering don't have a lot of convictions. And that again is a mock sport. So in fact, that is a really perverse situation where now you can get off a list because you've got so much money laundering that you've got tons of convictions. These lists are a mock sport and they create the problem. They're making the problem worse. If we were money launderers, we know exactly what to do. Avoid those countries they list all the time. Go to the countries we can lose ourselves. So let us try and raise the standard where international lists cannot sanction countries merely on the basis of subjective and arbitrary processes. It must be backed up with evidence of money, that is where the material amount of money laundering is taking place. Thank you very much.
Thank you very much. Our goal with this portion of the agenda is to discuss a variety of proposals that require concrete action from stakeholders in the issue of financial access. These proposals come from many of you around the table today, and all of these proposals are designed to advance tangible solutions to de-risking and to improve financial access, as so many of our speakers have eloquently described. As a group, we may determine that some ideas are worth pursuing, and if so, some may step up to commit to action. We won't solve the issue today, for sure, but every one of you wants to do more than discuss the issue and effects. We all want positive change for our solutions, our institutions, for our constituents, and our members. For all